What's good, trader and investor homies? It's your boy Kevin. This is Touchdown Trades. I'm your trading BFF and your stock market bestie. That's right, like a teenage girl. I'm like a teenage girl and you're my bestie. We're besties. We're besties. And in today's video, we're gonna be talking about 5 stocks that are great discount buys right now as the stock market has crashed, as it's pulled back over the last couple of weeks. We've seen a influx of bad news affecting the stock market, stimulus, a rise in you-know-what cases, and also a divisive election. But if you look back at the last election, the exact same thing happened. Right before the election, stocks dropped, stock market prices dropped, and I think we're at an influx. I think this is a buying opportunity, and I'm not going to miss out on it because I think after the election, everything's kind of settling down. These stocks are going to find a bottom, and they're going to bounce back up and head back towards all-time highs. So I want to get in while I can at a discounted price. So we're going to talk about my top 5 stocks to buy at a discount right now. So if you're new to the channel, we talk about the hottest stocks in the market every single day. So consider subscribing, hitting that notification bell so you get alerted every time I post a video. And before we get started, do me a big solid and like the button. Just go down there and start clicking all the buttons because it tells YouTube that these videos do provide value and helps them to promote my channel. All right, guys, as always, let's secure the bag by making smart investments and sound trades. Let's get it. All right, all my trader and investor homies, let's talk about my top 5 stocks to buy right now at a discounted price due to this most recent market crash, this most recent market correction, and we have had a doozy, boys and girls, over the last week. We've seen the S&P 500, the SPY, drop from 355 all the way down to 320, and we're currently coming in and testing this 200 EMA. And a lot of people are scared because of the election and no stimulus, that type of thing, but I see this as a buying opportunity. We'll talk more about that and why I think this is a good opportunity to load up on some good discounted stocks in just a second. Before we talk about my top 5 stocks to buy right now, check out the link in the description after the video if you're looking for a new broker. If you open an account with Webull using my link in the description, deposit $100, you get 3 free stocks valued up to $1,600. So imagine if you just deposit $100 and you got a share of Facebook or some other great company for free. You can't beat that deal. So check that link out after the video's over. Stock number 1 is going to be ticker AAPL Apple. That's right, the big tech giant Apple. We typically focus on smaller growth stocks on this channel, but I think this is a great opportunity to get a piece of the apple pie, no pun intended, right now at a discounted price because the market has sold off. Apple just a month ago was trading up near 140 and is currently just trading above 105 right now. So I think we're getting the opportunity to buy this stock at a discounted price, and I see long-term growth potential not priced into this stock. When most investors think about taking a stab at Apple, think about investing in Apple, they think they're investing in the phone company, the computer company, but I don't think that's where the growth is going to come from. I see Apple selling their software as a service. They just released that package deal where you can get all of their services for 1 monthly price. But I think Apple can also take on Netflix. I think Apple can start the Apple TV. I think they can start producing their own content, doing their own studio content, and really take on Netflix. Netflix is on an island by itself right now, and a company like Apple can come in and just take a big stab at Netflix and really up their studio work and producing more content. And I think they could build a subscription service similar to that of Netflix. That is why I think Apple is not necessarily undervalued, but I don't think its potential is correctly priced into the stock. I think it's priced as a device company per se, not a software company, not as a streaming company. And I think that streaming, that Netflix subscription model, business model, is going to allow Apple to grow in the coming years. So right now it's trading at 108. I think this stock holds these levels on this most recent pullback and holds this 200 moving average down here toward the 100. And I think we round back out and break those all-time highs and crack that 140 level. So I'm putting a 12-month price target of $150 per share on this Apple. We are getting a great opportunity to buy the dip and sell the rip, baby. One of the favorites on the channel, the Stallion, has been dropping like a rock. It's dropping like a rock that you hold over the cliff and just let go of straight down. Okay, it's been a rough couple of weeks for this workhorse. We were trading up near $31 a share just a couple weeks ago, and we've since rolled over, and now we're trading at $15. But good news, we have the $200 EMA coming in right under $15, and that is going to hold support in my opinion. Also, this $200 million funding that Workhorse got is going under the radar. Institutional lenders just gave Workhorse a $200 million loan. And I know you're thinking to yourself, why is a loan ever a good thing? Because this loan is showing proof that big institutional lenders have faith in Workhorse to succeed. If Workhorse gets the USPS contract, the interest rate of this loan drops, telling me that these lenders believe that Workhorse is going to get the USPS contract. Also, it's going to allow Workhorse to up their manufacturing game. And if the stock price goes over $35 per share, the lender can convert the loan into stock. So this is just telling me that these big institutional lenders that know what they're talking about have faith in Workhorse and have faith that Workhorse is going to get the USPS contract. If we take a look at the chart, we have a very significant area down right under $15. The 200 EMA, that is where the institutional buyers are going to come in and start buying, as they love to buy in front of the 200 EMA moving average for relativity purposes. Also, we have a consolidation gap area right there under 15 as well. So I believe this area, the $14 area, is rock bottom for Workhorse. So we're getting the opportunity to buy it at a deeply discounted price. Also, if you look at the RSI, it is straight at the bottom of the RSI indicator, indicating to me that this stock is oversold. So whether you're a swing trader or a long-term investor, right now is a great time, in my opinion, to get involved with Workhorse. I'm going to be adding down here and looking for this thing to head back up. I'm putting a 12-month price target of $30 a share for Workhorse, disregarding the USPS contract, all that stuff. If they get all of the USPS contract, obviously I think the stock's going to go way higher. I could see the stock going to $50 a share if they get a big chunk of the USPS contract. But disregarding the USPS contract, I think this is a $30 stock, and it's just been hurt by the overall EV sector selling off. Stock number 3 is going to be RKT, Rocket Companies, Rocket Mortgage. This is a mortgage origination company. You've heard of Rocket Mortgage. You've probably seen the commercials, but we're getting the opportunity to buy a great company, one of the biggest players in the mortgage industry at almost all-time lows. This sucker IPO rocketed up to over $35 a share and has since pulled back to under $18. Why has the pullback happened? It's my belief that the super low interest rates that we're seeing right now are hurting these mortgage companies. And when these mortgage rates recover, a company like Rocket Mortgage is going to recover as well. And I believe this stock to be undervalued. Rocket companies have originated $1 trillion in home loans, 4.9 out of 5 stars earned by Rocket Mortgage on the App Store. $900 million marketing spend in 2019. 96% of all e-closings in the U.S. happen with Rocket Mortgage. I think Rocket Mortgage is going to benefit from the Rhinoceros Rex. Why is that? Because people aren't going to their local lender and asking for a loan. Because of the time we're in, everybody's stuck inside. People are going online looking to find loans, and Rocket Mortgage has that covered. Their process of getting a home loan is streamlined. You go online, you give them your information, they pre-qualify you, and the whole process is streamlined. How do I know? Because I bought my house using Rocket Mortgage. It is an easy process, and this company has growth potential out the yin-yang, baby. Look at the growth revenue from their earnings release. In 2019, we had $1 billion earnings revenue. We have a steady increase. 2020, we got the $4 billion number. So this company has steady growth, and we're expecting to see over 25% growth over the next 5 years in earnings. So the company is still growing. It's undervalued right now on the chart. The company's still growing. It's undervalued right now in the chart. It's been beaten down pretty good off the highs of 36 bucks, now trading at 18. So not only is it undervalued, but you're also getting the growth over the next 5 years. So I'm putting a 12-month price target of $45 per share, almost 300% upside on this RKT in my opinion. Stock number 4 is going to be Nordstrom, JWN. This is one that I've talked about a lot in the past, but I'm just such a big believer in the company coming out of this thing alive and surviving and getting back to where it was a few years ago. We can see that it was trading up over $45 a share just a couple years ago, and now we're trading at $12 because of obvious reasons, obvious underlying things that happened in the country, in the world that was out of Nordstrom's control. But they are migrating their business model to an online customer base. They're transitioning their higher end customer base online. This is not a Target customer base. This is not a Walmart customer base. This is a higher end customer base that not many other stores can target. So Nordstrom is unique in that aspect. And I think this is going to be kind of a moat for them. You hear about a moat. Other businesses not being able to penetrate your moat, and I think Nordstrom is on an island here. They have a higher end customer base. Once they transition to more online sales, this company is going to thrive. So we're trading at 12 bucks right now. I got a 12-month price target of $24 on this Nordstrom. I think we have 100% potential, and in the next 3-4 years, I see this stock trading up near $35-$40 a share. I think they do need to close down some of the failing brick and mortar retail stores, transition those savings to promoting their online store. Nobody's going to Walmart to buy a Louis Vuitton purse for their wife. Nobody's going to Walmart to buy Louis Vuitton loafers or Ferragamo loafers or nice cologne. You're going to Nordstrom, and they need to market that, and I believe that they will, and I believe that they survive, and I think this company is undervalued. This is my favorite retail stock in the entire market right now. We're going to wrap things up on this video with Tesla, baby. TSLA Tesla. It's not often you get the opportunity to buy the dip on Tesla, and here we are. We're getting that opportunity. We ran up post-split to over 500 a share. We are currently trading at 386. Okay, we have a nice level of support on Tesla right here at the 350 area, and I don't see us breaking that 350 support area that we developed right back here. So we've tested that 350 area support several times and held. We also have the 200 EMA creeping up, which will act as support, and I think this kind of triangle formation that we're building is going to end up with a blast off to the upside. ARK Invest has a price target, I forget what it is. It's a crazy price target of like $7,000 a share within the next 10 years. I'm not going to go that high, but I think Tesla is going to be the leader in robo-taxis, the leader in solar, the leader in autonomous driving. So this is not only an EV stock. When you invest in Tesla, you're basically investing in an ETF for the future. And I truly believe that, and I think this company, anytime you get a dip, you should take advantage of it and buy the stock. Look at the RSI. The RSI, anytime in the past that it was below this bottom line here, it was just a green lights buy. Look right there, we rocketed up. Where else are we? RSI low here, right there, it correlates, and then you get a rocket up. RSI low here, correlates, then you get a move higher. RSI low here, correlates, you get a nice move up. And the RSI right now is very low. We're coming into support, and I think we get a nice move back up towards $600 a share. So I'm putting a 12-month price target of $550, and I think that's a very modest price target. Tesla, anytime you get a dip opportunity, buy the dip, sell the rip, baby. All right, guys, that's going to wrap things up on this video. Hope you enjoyed it. If you did, like the button for me. If you're not yet a subscriber, consider subscribing and hitting that notification bell so you get alerted every time I post a video. Also, check out the link for Webull in the description. If you're looking to open a new brokerage account, you get 3 free stocks valued up to $1,600. It's the best deal out there right now, so check that out. All right, guys, I'll catch you on the next one. Until next time, peace.